Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glen Sutherland.
Welcome to a new episode of Canadian Investing in the U.S. This week I have two guests. If you guys want to start off by giving yourselves a bit of an introduction, and we'll jump right into this.
Absolutely. Well, I'm Alden Guajardo with Mobile Mailbox Money and Silvercrest Opportunity Fund. We're here in the local market of Arizona. We specialize in originating notes on low-cost housing, and for a double-digit return, we started a fund, and we operate as a licensed dealer of manufactured housing. I'm here today with Sean Gibson.
Yes. Absolutely. My name is Sean Gibson with Mobile Homes, of course. Quick little background. I've been buying and selling single-family homes for about 15 years here in the U.S. You know, due to the high prices and the low availability, I made a switch over to manufactured housing, and of course, we'll get into that today. But the advantage of manufactured housing is huge. There's so much opportunity, but I'm really excited today to show you guys opportunity, huge opportunity here in manufactured housing.
Awesome. So maybe before we get going, let's just start off by defining that manufactured housing. So some people aren't thinking you're talking about trailers, you're not talking about. So we just know what we're talking about here to start with.
Right.
Yeah, great question. I think a lot of time the misconception is the homes have wheels on them. Like a RV, could pull off on a flatbed. Well, that's not the case.
Not at all.
Right? Manufactured housing actually moves one time in its life, moves from the factory to the lot most of the time, and those homes are on factory spec piers on not permanently affixed most of the time in mobile home parks. So these are leased land manufactured housing units with removed axles and tires. The home has to be permitted to move. You have to hire a moving company and things of that nature. And that cost could be pretty outrageous considering as this is the seek for affordable housing,
Absolutely.
At the end of the day. So leased land manufactured housing is considered personal property. If you're unaware, personal property manufactured housing has a title on the home almost akin to a car.
Right.
So it's handled through the Department of Transportation, through the DMV, and title work is a little bit different than residential real estate because you're not going through those conventional transaction based. So that's kind of the difference between, say, a conventional RV, like you see the movies RV, people packing up the family and going traveling around the country, driving from RV park to RV park to go see the views. These are primary residents, semi-permanently placed in established communities with city water, city sewer, city trash. The community has, amenities like pools, jacuzzis, opposed to another market where it may be off in the boonies. These homes are in established areas with high population density and things of that nature.
Awesome. So for people, a lot of people are listening to this, way more people listen than watch this, so they can't see the picture in their background. So let's kind of describe this a little bit. Are these one bedroom places, 3-bedroom places? What do they kind of look like? What kind of square footage? We kind of just so people have a feel of what this looks like.
Great question. Great. And I could take that as well. So mainly what we invest in is 3 bedrooms or to 4 bedrooms because people, have families. Yeah. I mean, a 1 bedroom is a 1 bedroom, 1 bath. That's just too small. So ours are 4 and 3 bedrooms, 2 bathrooms, square footage around, I'd say 800 to 1,300 square feet.
Some come a little bit larger.
Yeah, absolutely.
That makes a lot of sense.
On average, about 1,000 square feet. And we have homes in 55 and older, as well as family parks, try to hedge the market. But these communities, have an established lot, so they have a little yard and things of that nature, opposed to an apartment living solution. This kind of presents that potential alternative. We do go as low as 2-bed, 2 baths, 2-bed 1 in specific situations to kind of hedge around the affordability. But the kiss of death is a 1-bed, 1 bath. That's really kind of a challenge out in the market. We're trying to ultimately offer to the wider variety of buyer at any given time for the inquiry. People are looking for at least 2 bedrooms, whether they need to rent out a room or not, provides that availability even down the road.
Interesting. And just listening to you guys talk about this, my mind's going a million different directions. Even if you wanted to say invest in these, Maybe I'll talk about this, but are people investing in buying the homes? Are they investing in the note behind the homes? Are they investing in a syndication that's buying a bunch of these and putting them in one spot and investing in a syndication that owns the park? Like what does this look like?
Yeah, so it's a multifaceted program. We've come to cultivate a seller carry finance note out in the market that is originated with third party underwriting and a licensed mortgage officer. So that provides, i.e., a note investor, the opportunity to buy that note. And any individual can buy a note. You don't have to be an accredited investor. You can buy a note for the face rate of what that provides, the yield perceived in acquiring a note like that. Additionally, we started an accredited investment fund. So I'm president of Silvercrest Opportunity Fund. That's a 506c3c1 that allows investors to participate in a portfolio of notes as we take them down with Silvercrest, and they own a per unit debt share in the participation within the fund. We're currently offering a 1 and a 3-year term for accredited investors. The 1-year term is a 10% net paid monthly, or 3-year term at a 12% net paid quarterly, and we're able to offer that as a registered fund currently. So happy to announce that that's our first year. Last year, the last quarter took our first investment for that in particular, but we've done millions of dollars in manufactured home notes. Kind of interesting with mobilemailboxmoney.com. We've provided the avenue for multiple people to start funds, and that's why we've started our own. So that's kind of how people enter into the investment category for manufactured housing, is they can buy a note opposed to going to buy a home, rent it out, and do a long-term rental strategy, whether that be in residential real estate or on manufactured housing. Mobile homes kind of offer a little bit more of a niche knowledge to operate as a landlord and tenant. But this provides, someone to be the bank and kind of exclude all of the associations and hardships in owning and real estate, and kind of kick that to the curb of landlord and tenants hardships, and become the bank in a note investment platform. And I don't have to tell the Canadian note investor, seems pretty prolific about those things that are pitched to note investors all the time, tired landlords. That's kind of what we're looking to execute on. So happy to be here today. And that's kind of the specific opportunities that someone may be able to invest in.
Okay. Just, I want to get this all straight in my head. And if I'm not completely straight, understanding it, maybe someone else is the same way. So, you guys you go and have another company that they would go and build the homes, put them all in there, and then you guys are basically handling like the notes on the back end of the underwriting and the syndication of those projects. Or I guess you're doing it as a fund model, right?
So go ahead.
Yeah, so go ahead.
We started as a licensed dealer of mobile homes,
Okay.
buying and selling for cash, and cultivated that business originally, operating as under the Department of Housing here in Arizona, buying and selling for investment, and realized the opportunity to jettison our business, get more transaction based, because not everyone had the availability to pay cash for a home. Started seller financing, and that's how we've come to cultivate like Mobile Mailbox Money and Silvercrest through Win Mobile Homes,
Right.
Who's licensed 8670 here in Arizona. And we've also started building more listing based. So niche market personal property listings, almost like a real estate agent, but in manufactured home sales. So not only are we a licensed dealer on the front end niche market manufactured housing, we started the seller carry finance division, which as we create more notes, we have to go raise more private capital. And that's why we've started the fund, long story short.
Right. And what we don't talk about, Glenn, first, the caveat is Win Mobile Homes. That's where it all starts. Because we buy manufactured homes already in parks. So we buy them, they're ugly, they're stinky, they're smelly. Exactly. And you've seen those TV shows where you got a hoarder house. We do the exact same thing. We've got granite, new paint, AC. I mean, we'll send you the link, but these things look amazing. But it all starts there. So we take a unfurbished asset, we refurbish it, new AC, paint, CNC appliances. That thing looks amazing. And then we find a new client, which goes into mailbox money. So it all starts with Win Mobile Homes, manufactured housing. We make that thing just shine. We'd love to show you that as well too. But that's where we start with an asset.
Cool. And you said I might have misheard this, but I think you said at the start that you could invest and just be the note holder on a single mobile home, or you could go into the fund and own a group of them, or like the whole, be a shareholder of a larger portfolio of them. What would be the difference between the two? Maybe some of the difference in returns, the difference in risk, the difference in, and just what would be the difference between investing the two different ways?
Yeah, absolutely.
Hello, everybody. Thanks for listening to the podcast. I just wanted to let you know that I've created a new coaching program. I believe the new coaching program has way more value than any of the programs that have even existed in the past. What we've done is pre-recorded all the lessons so that you can work through it at your own pace, which is pretty cool. And then we're going to meet up on a regular basis to answer the questions, do deal analysis, and actually spend our time together working on things instead of spending our time learning things. I think this will make a seamless transition to buying in the United States and will help you solve a lot of your problems. If this is of interest to you, go to glensutherland.com/coaching. I hope to help you guys invest in the United States, and I hope we provide as much value as possible. Back to the podcast.
Holding a note singular when on a single acquisition, opposed to investing in the fund, comes with some elevated risk potentially. That's mitigated at the end of the day, but anything could happen in real estate investments, right? So owning a note by yourself, say Glen came and bought a note from us. The potential risk is for that note to go non-performing. And that non-performing note would have to ultimately be pushed through formal repossession and eviction and things of that nature. Here at Win Mobile Homes and Mobile Mailbox Money, if an individual buys a note from us, we actually help usher that forward through our back office at cost, opposed to them having to go hire an eviction attorney and figure out those processes. We've already built that back office, quote unquote, servicing for the investor that may buy a note from us. So buying a note, one note, may be a little bit more risk than an individual is wanting to retain at the end of the day. It does come with an elevated return, which if you're looking for higher return, we'd love to be in contact with someone about that for specific quotes of the rate received on buying a note. But that's kind of the elevated risk, right? With risk comes reward, and we're trying to mitigate that at any given time for an individual that's buying a note. Whereas investing in the fund, they come built in with a portfolio of notes that's hedged across as we acquire, the notes that we procure out in the market. And I'd like to grow that to like 100. So we would ultimately be per unit owners in the portfolio of notes, and at no cost to the investor. If a note goes non-performing, we end up re-cash flowing that property, repossessing, retitling, and things of that nature.
Okay, that makes a lot of sense. And you said like for the individual holding a note, you said something of like if they were to become non-performing, they'd have to do an eviction. And that's what triggered me, because I was thinking if this was a home, like an actual house, instead of like something that was registered at the DMV, you'd have to go through the foreclosure process.
Yeah, so through our attorney revision, we go through a repossession for that property because it's a personal property manufactured home. Usher it through, I think it's like a 50-day process of individuals go non-performing. They end up getting their notice of non-payment within like 7 days. 14 days after that, they get a pay or quit, and ultimately that ball starts rolling. In our business, we're not here to take people's houses at the end of the day. We're here for the payment. And if at all we can maybe restructure that at that time or add a payment on the back end. I don't so much market those out, but it's important to know that, at the end of the day, but there is recourse, right? There's recourse, there's a tangible asset there. If that note and someone puts their head in the ground, and is non-responsive of creating a solution, ultimately that home will go through the formal eviction and repossession, retitle, go back up for sale, etc.
But also, Glenn, to kind of piggyback off that, our clients, they're really qualified. So they've got, W-2, pay stub, credit scores, no bankruptcy, and also they got a hefty down payment. So most of our clients, they don't want to get repossessed. They're trying to do the right thing. So it's just like if you're going to go to Bank of Canada or Wells Fargo to Bank of America to get a loan, we go through the same strategies and train the same underwriting processes. So those instances are very, very rare, but our clients are all really, really qualified to get that mortgage.
Yeah, it makes sense. And I just like in my head, I'm thinking like, compared to doing a foreclosure, like an eviction is a lot cheaper, right? So if you had to, like, I always like to understand like worst case scenario. If you had to go through that process, because I'm the same way. Even when I'm doing like any sort of creative selling, like a lease option or a contract for deed, I'm always, I'd rather keep them in the property. I don't want to do turnover. I don't want to have to re-renovate this property. It's not in my best interest to do all that stuff.
You sound like an investor. You've been through it before.
So what didn't I ask you? What should I have known? What should I know about this? What should I have asked? Is there like I'm just such a novice that I'm interested to learn more. Just was there something I missed, or just maybe we didn't get into? I have more free content. So if you're interested, I created a PDF guide and a video to go along with the PDF guide to complement it. And what the guide is all about is the 5 most common mistakes that Canadians make when investing in the United States. So if you're interested in this free guide, go to CanadianInvestingInTheUSA.com/mistakes. And let's go back to the podcast. And it's free.
I think that there's a big negative connotation towards manufactured housing, and it's kind of due because the past 40 years in manufactured housing has been seen in a negative light with like Trailer Park Boys, Netflix series. People get a real bad taste in their mouth when now affordable housing is literally a state of emergency. And we just saw a huge legislation pass of like a $200 million program, government funded under HUD, I think for more housing in manufactured homes. And I think it's important to understand that there's a new frontier of capital investment in mobile home parks, as well as institutional financing on manufactured housing. Why? Well, because the demand is now far outweighing what can be qualified for as single family properties. Average income is like $60,000 here in Arizona. Average residential properties $450,000. Where's the give in the affordable housing crisis for these vast new individuals that can't afford to buy a property? 4 years ago, you had 3% rates and people could qualify a little bit easier. Well, that now, because of COVID, the lack of building properties, the lack and interest rates peaking double of what they were, it's now pricing and creating a new frontier on the analysis of these institutions. They're like, hey, what's going on in the market? Well, hey, mobile homes and manufactured housing parks are potential cash cows because of the demand, the new fulfilled demand in low cost housing. So I think that, it's important to understand that this is not your grandma's mobile home anymore.
Not at all.
This is now considered primary residence housing, depending on what market. California is a big market for mobile homes and manufactured housing. Florida's a big market for mobile homes and manufactured housing. Texas is a big market. Arizona is also a large market. The case unique situation about Arizona is we don't have all that much natural disaster. California is under fire right now, as well as Florida just hit with a huge hurricane. To be in a market that has little to no natural disaster, anything could happen. Insurance could be affected. Insurance could be affected in these markets and price things out. We're kind of in a little, I don't want to call it a bubble, but we're insulated, I think, from a lot of these factors, which creates a true new appetite for the solution to affordable housing here in Arizona. And they're seeing it on a legislature standpoint, to see the government actually coming in and electing new budget, when the budget's on the line at any given time. That's interesting to see. And I wonder what your take on that, Glen, is.
I think I think a lot of this stuff, whenever I first started looking at mobile home parks, back in, I don't know, it was probably 15 years ago. And at that point, it was a lot of, they weren't allowing new parks. It was like
Right.
they were taking over parks as they came up for sale and turning them into other land. And I think that the government has changed their attitude that this is the only way we can really afford to keep this and actually have nicer communities, right?
Right.
Because I think there's, yeah, like you said, the stigma was just that it was run down and sketchy people, and that it doesn't have to be like that. It can be just like
Not at
any other
all.
neighborhood.
Right. Absolutely.
And from a capital investment standpoint, that what you just said there reassures the hedge, because the potential for a park to get sold to the city and it go demolished and be redeveloped into a new opportunity, multifamily or whatever, is a question people ask. Hey, what's the long-term hedge? What could happen, and things of that nature. Well, these parks are in a grandfathered situation, and not only are they grandfathered in, it creates a high level of demand because they can't so much develop them anymore. And with it being the solution, these institutions are paying low cap rates for the acquisition, for the long-term hedge of the cash flow. That means that park's going to be here probably for another 100 years. It could be longer, because they're investing on an institutional level with 50-year returns, projected to hold that long-term, create private public offerings like ELS and a couple other of the mobile home park owners. You got Warren Buffett, who is a big investor in the manufactured home communities and who owns Clayton and Cavco. Those are two of the largest manufacturers of mobile homes, as well as 21st Mortgage, who takes the long-term hedge. So those factors, knowing that it's harder to develop more mobile home parks, it creating a solution for the affordable housing crisis, the legislature kind of peeking their head in, and institutions paying low cap rates for the 50-year return. To me, that seems like 100-year stability built in behind it. Anything could happen at the end of the day, but for that land to be so high in value, by the time you buy it and try to develop a multifamily project or develop housing, it's priced out of what a savvy investor would deem a return on investment.
Right.
And that could be just my opinion, but I think that provides great stability within the program.
Awesome. Before I let you guys go, tell me about the company. Someone says, hey, you know what? This sounds interesting. I want to talk to these guys. How do they do it? Where do they find you?
Absolutely. Yeah. You can call us direct at 602-888-CASH, or view the available notes that we have on mobilemailboxmoney.com, or the accredited investment fund at silvercrestopportunityfund.com. That's silvercrestopportunityfund.com. We got Sean Gibson here today. He's one of our liaisons. Happy to get in contact with anyone interested. Absolutely. And I'd love to follow up with you, Glenn, about your network and up there in Canada about the case specifics of investment here in the States, and what that looks like. Happy to collaborate.
Awesome. Thank you for coming on the show. That was a ton of information. I think people might get excited and might have to just give you a call to get the details on how this is all working. But no, I love it. I love seeing a different angle. I love a fresh perspective.
Definitely.
Well, hey, Glenn, thanks so much Glenn. For the time.
Yes.
We'll follow up soon.
Stay warm up there, Glenn. Stay warm.
That was a nice video. Bye.